a VIP only stream in reference to entering trades. So let's go ahead and look at a coin. So this one we did get stopped out on. It was a really nice head and shoulders. You know, we had a shoulder, head, or shoulder. Broke below the level. It was looking good. And then all of a sudden just started flipping. So of course we have a really tight stop loss. We did get stopped out. But let's go and look. This one right here, 1 billion market, 1.7 billion market cap. This is another one that I was looking at. It did break out of my zone, but and it's just tricky right now. You know, here it looks like it's going to roll over and possibly take the market with it. But we have coins that are breaking out. You know, LDO. This one we're still in a long, so this one's doing good. ZEC. This one we didn't. I don't believe we got. No, we didn't get into this one. But this was another one that I'm looking at. Of course, you know, it did its little retrace. I've been looking at it since then, and broke above the level, came back up underneath it. This one, I think it's going to do well. But same thing with TRON. You know, my alert went off the other day, but I'm just watching it. It's just really tricky, you know, entering trades right now, because we're gonna get a pullback. It's not a matter of if we're gonna get a pullback. It's, you know, when. But so let's go ahead and get started with today's lesson in reference to just entering trades, period. Let's look at this one real quick. So this one looks like it's ready to add to our entry. But since there's no really any pivot, I would feel safer once it crosses this level to add to our entry. So this one I'm still monitoring. It's on the 4-hour time frame. Doge still doing well. Okay, so let's go and get started. Let us look at, let's change this, and give me a coin. Give me any coin. What did I just do? I don't know what this does. Oh, default. Okay, so give me coin, any coin, so we can look at one of these and just do the whole thought process. So while y'all are thinking of one, I guess I'll just look at band. I like band. So here, let me go and take off my moving averages. Let me take off everything. So what I'm going to do now is we're going to do market structure, and I absolutely love. So here's my level that it need to break above or to get some support. It did that, but let's go ahead and delete everything. And what I like doing is I like having this on my chart. This way it makes it really easy to make sure that I'm following the structure and I'm following everything that needs to be done. First thing I'm gonna do is I'm gonna go to a higher time frame. Let's start with the weekly. And this gives us just the overall thought process on what we're doing and what we're seeing, what we're looking at. So here we can see that we're in a downtrend. We do have support that it's finding right in this area. So what we're doing is now that we have the market structure, we're also looking at fair value gaps. We're also looking at order blocks. We're looking at basically everything that we've learned. We're looking at the strength of the move. You know, are the lows getting lower, and if so, by how much, or is it just barely? You know, are we starting to kind of do this with the lows where we have doing this number and then it's coming down pretty significantly and then it starts doing this? This is what I'm referring to when I'm talking about the strength of the move. So here we had a low, and this is a pretty nice move. Then this is a pretty nice move. Then this is a pretty nice move. Then it gets reduced. Then it gets reduced. Then it gets reduced. So what it's doing, it's losing its momentum going down and potentially starting to curve up. So this is all the stuff that we have to look at. All right. So here we do have our low, but what we're doing is we're doing market structure, and we're looking for, and let's see if I have it here. So for the downtrend, we have to do a couple different things. One, we have to identify lower highs, and we have to start from the highest point of the trend, and we go and we look for green candles. So make sure my magnitude is on. I start from the highest point. I come all the way down till I see 2 green candles, the second one being higher than the first. We see it right here. Then we come up, then this leg has to do something. If this leg doesn't do anything, then there's no need to pull this leg. So because this leg crosses this, then we're good. So we come down, we come up, we do this. This is a lower high. It's fulfilling the objective. And then that's it. I mean, because everything else doesn't cross. It doesn't cross down here and doesn't cross up here. So the only thing I can do, let's go and make this our weekly. So the only thing I can do is this part right here. Because once again, this doesn't cross up and this next one doesn't cross down. So then I stop. Because this leg always has to do something. Yeah, we can do ACH. And I was actually looking at that one too. Copy. So let's do ACH. USDT. I was actually looking at this one yesterday. I have an alert. I set that one yesterday. But I do like this one. And let's go ahead and post this up here. So same thing, downtrend. So let's go ahead and let's delete this for now because I don't want it on the screen. Okay. So we're looking for downtrend. Magnet tool on, come over here, go to the highest point. We're coming all the way down till we see 2 green candles. We do see 2 green candles right over here. So we're going to come over here. We come down, this leg does something, it crosses this level. And then we do another high. This leg does something, crosses this level. And then that's it. Everything else is internal. This leg doesn't go up and it doesn't come, doesn't go up to come down. So this is the most I can do. Now, if I wanted to, I could extend this leg up here to tell me that I'm going to start on a lower time frame here. But since we have this, and let's bring this over, we can see that we have this is our last area, our leg, and it creates an SFP. So this tells me, because this is the leg that did something, what we're doing. So this is our weekly SFP. Let's see if I can find it. And because this is the downtrend SFP, the bottom is the strong. So here, we're going to come over here, do weekly low, and then this is the strong low. And because this leg did something, this is the leg that we identify lows and highs. So this is our high. So this is going to be our targeted high. So we're going to come over here and we're going to put this as our weekly high. And this is our targeted high. Now, since we're here, let's look and find any kind of fair value gaps, order blocks, because now we're stepping it up a notch. Now we're looking for fair value gaps, order blocks, mainly in this area, but we can also look up here as well. So the reason I'm not looking up here like all the time is because the price action has to move a whole bunch in order for us to come to these areas. So right now I'm looking for fair value gaps, order blocks. I really don't see anything that hasn't been touched. Everything looks good here. This one's been touched, so everything's good. So of course I'm always going to have this as organized as possible. So we're going to put this one as weekly. Let's do W for time's sake. Now let's go to the daily time frame. So I know on the daily time frame, I'm starting from the lowest point and coming here. Now this is a good one because this is actually a range. What is this? Is this a high? Is this a low? Well, let's kind of look at it a little bit more. Let's see here. We go up, down. So we could do this as a higher lows. So we have up, down, and then we have up, down. So these lows are higher. And then for these highs, do they go lower? So we have a high, equal, just a little bit. So let's go ahead and do this as the looking for higher lows, because we can kind of see that here. So this would be our uptrend. So we're looking for 2 red candles. We're going to start from the lowest point. So we're going to start from the lowest point. Lowest point. We're going to go up until we see 2 red candles. and we need to do higher lows. If we don't fulfill the objective, then we have to restart. So here we have two red candles. We have to look for two red candles. Here we have red candles. We come down. Now we're coming up. And do we do anything? Nope, we can't do anything. This one doesn't pass this. And this down here doesn't pass this. So we can't do anything. Not on the daily. So we delete this. So since we can't find anything on the daily, now we look for order blocks, swing order blocks, and here's an order block, and fair value gaps. I mean, fair value gap. Here's a fair value gap. So this is a daily fair value gap. And extend this over here. We're going to change this to center. Say okay. And then it's not going to be center. I don't know why it does this. I think I have to manually do it. So let me delete this. So let's try this again. So here to here. And then now if I type it in, it should work. All my presets, they got messed up. I guess they did an update. So daily fair value gap. And it's going to be to the right. Okay. No, still does it. I don't know. Anyway. Okay. So daily fair value gap. Do I see anything else? Let's see. This one gets touched by this. Any other fair value gaps right off the bat? We do have one here. So fair value gap. And let's just put this like this. Daily fair value gap in the center. Okay, anything else? I really don't want to look up here. And plus there's really nothing up here. Okay. So this is going to be our daily. Couldn't find any structure on the daily, but we did find this. So now we're going to go to the 4-hour time frame. And 4-hour time frame, pretty much going to be the same thing. So let me look at this. Okay, so now I'm thinking, do I want to do all these ups and downs, ups? Because this right here is the perfect definition of a range. So what we could do is we could at least identify this low. So let's go back to the daily. And let me make sure, yeah, it doesn't cross it. So let's do the uptrend. Let's do this. So we're starting from the low. We're going up to see two red candles. And we're looking for higher lows. So here, and then of course, that's right, we couldn't do anything else. Okay, so this one is just a trend. So all we have identified is this weekly. And I mean, if you wanted to, so higher low. So the only thing that we can do on this one is just kind of what we kind of started doing, but we would have to use this and then come up because this leg does something, and then come down and this leg does something, but it doesn't fulfill the higher lows because now we change the trend. But then we change the trend again. Yeah, TradingView is always changing things around. Most of the time for the better. So I would just use this part right here so we can get our daily. So for this one, we'll do this. Come over here, swing failure pattern. So same thing. We would do this as our strong daily. So daily low. And then this is our strong. And then we would do this as our high. Daily high. And this is our targeted. So daily S&P. And now our range just got tighter. So again, for this one, the reason we did this daily, the reason we did this is because originally we were starting the uptrend, but then when this broke, then of course, and we can't do anything else, this is what created this strong, the low and the high. All right. So now let's go to a 4 hour. And for the 4 hour, see here, see it breaks it here too. So on this one, I literally have to be forced with the thought process of just starting from here rather than starting from where we're supposed to start. Because there's nothing really we can do, because this is just chop. All this is just inside the trend. And there's really nothing we can do here. I mean, we can do, so let's go, so we're on the 4 hour time frame. We do have some structure here. It's not the best, but it's some structure. So uptrend, we're looking for 2 red candles. So we're going to start from here, since we really can't do anything with all that chop. However, let me back up. I actually want to start from here, because this is going to give us a different perspective. So, and I'll show you why in just a second. So work backwards, last 4 swings. So if I were to do, look, it's not snappy. From here, coming up, then we have this 2 down, then the highest point here, and then it comes down all the way to this point. So this will give me a high here and the low here. Versus if I started here, which would give me, so this one's just hypothetical right now. So up, down. So instead of giving me this high and this low, by pulling it here, it gives me this high and this low. And then this one I could probably do on a lower time frame. So that's what I'm going to do. So this is my area. And we have another swing failure pattern. So it's a 4 hour. And this would be my low. 4 hour low. And then we have it right here. So it's my strong. And then this would be my weak. 4 hour high. Targeted. Okay. So now I can do my 1 hour on this. But before I do that, I'm looking for, here we have a 4 hour order block. So we have a sell to buy. So here is our 4-hour order block. 4-hour order block. Okay. And yes, very nice. And then now we also have this one got touched. So this was a fair value gap, but this wick touched inside of it. So we won't use it. It barely touched. But still we have this other fair value gap, so that's fine. Let's see here. Anything above that we can use? Not really. They all just come up and up and up. So that's fine. We're not going to spend too much time on that. Plus, I mean, there's nothing really significant in this area. If it was like a nice block like this or a gap, then we would get it. But they all just kind of just up and down, up and down. Okay. So now this is our 4-hour. So this, we can put this as our 4-hour. Now let's go down to our 1-hour time frame. And then for our 1-hour time frame, we see an uptrend. It gets a little easier to see this since we're coming down in time frame. And then once we do all this, then we start thinking the process of actually entering the trade. So let's go ahead and undo what I just did. So this is an uptrend. So what we're doing is we're identifying higher lows, starting from the lowest point. So lowest point, higher lows, and we're looking for 2 red candles. We need higher lows. So we're coming up, looking for 2 red candles. We don't see any. 2 red candles. We don't see any. 2 red candles. Finally, we see 2 red candles. Second one being lower than the first. We come down to the absolute lowest spot, which is right here. We come up again, and this leg does something. It crosses this area. And then what I need to do is I need to create higher lows. So by coming down here, it creates a higher low. Then I'm going to come up. This leg does something. It crosses this. So we can only use the leg if it does something. Then it comes down and then it stops. It doesn't do anything else. So if I wanted to, I could actually put this here so I know where to start from. But I'm just going to put it right here. So this is my 1-hour time frame. And when did it do its last cross, which is right up here? So here we have our low, higher low, higher low, fulfilled what it was supposed to do. Then let's go and put this to here, hold down shift, come across, and now we have a swing failure pattern going to the upside. This is on the 1-hour time frame, swing failure pattern. So when we have a swing failure pattern going to the upside, that means the top is strong. So let's go to this, and this is a 1-hour high, and this is strong. Then, because this leg did something, this is the only leg that is allowed to have the labels of high or low. This is our 1-hour low, and then this is our targeted. Okay. So now this is our area. So do we have anything in here as far as fair value gaps, order blocks? Just kind of a real quick glance. We have something right here. It's really tiny, but we have this larger one here, so that's fine. Same thing here, little tiny one. We're not going to mess with that. So we don't see anything here. Let's come over here. Let's see if we find anything over here. By the time we get over here, bull market's over. Come on. Good Lord. All right, so we do have this area, but it's really small, and it got touched. Man, this is just a whole bunch of ups and downs, so there's nothing we can do here. So what I'm going to do is I'm going to come down here to this little calendar, and it's on today's date. I'm just going to say go to, and it takes me right back to it, instead of having to waste all that time. So this is on the 1-hour time frame. All right, let's go to the 15-minute time frame. And 15-minute, again, just a lot of chop. So I'm gonna actually stop here. You know, because not only that, but it's already close to this. Now, thought process time. So let's go to this. Let's come over here. Let's go ahead and create this as a 1 hour. Let's go ahead and hide our picture. And then now let's look at it from the 4-hour time frame, just to kind of see what's going on. Now there's a whole bunch of mess in here, so I like hiding my path and my SFP. And thank you, man. And then also the path and the SFPs, path and SFPs. Yeah, before there was double arrows that came out here, and you were able to go to where the current price action was at. But on one of their updates, they stopped doing that. So right now we're looking at this. Let's go to a higher time frame because it looks a whole bunch of ups and downs. So what I could see, price action downtrend, coming down, started going sideways, and it looks like it found its bottom. Now, would I enter right now? Definitely not, because it's really close to other highs. Now, granted, this is a targeted high, this is a targeted high. So that's saying that there's a really high chance that it'll break through those areas. However, we still have to remember that they are resistance. So would I enter right under resistance? No. Not only that, but we have a 1 hour strong high. So I'm not going to enter under resistance. I would really like to see this come down. Now, another thing that we have to take into consideration is this move. Is this move kind of normal for this price action? Or is this like a huge pump compared to the previous price action? As we're looking to the left, it's pretty normal. It came up, it came down, came up. So it's pretty normal. And what I'm meaning by this, as far as thinking about entries, if the price action was like this, little candles, little candles, little candles, and then like this, little candles, and then all of a sudden this move, well, we have a very high possibility that it's going to come back down at least to this area. But if we have price action that normally does movements like this is a pretty good chance that, okay, it could pull back a little bit and then come up, versus dumping completely because all these other ones were very tiny, and then you had that nice big move. So that's what I mean by you looking to the left. So right now this is in the range. It looks good. I really like it. I really like this. For me personally, I would not enter it. I would wait and see if the price action goes to the daily fair value gap, which is down here, or the 4-hour order block. Now, it doesn't have to come down. It could come down just barely and then continue up, because another thing that we have to take into consideration is the overall market. Right now, is it bullish? In my opinion, it is, because of Bitcoin, all-time highs. Now, once Bitcoin starts rolling over, which I thought I was going to do it right here, I thought it was going to roll over, but it's still fighting. Until Bitcoin does roll over and then come down, then that's when we'll see all these other coins coming down pretty nicely and then possibly breaking lows. But right now, it's bullish. Granted, we did try to get into this one at a short because of the pattern, and it breaking, not so much the pattern, but breaking the support and then having nice areas of interest below it. But because the market started changing back up, then so did the price. And of course, that was somewhere in here. Okay, moving on. All right. So what other thought process do we have when entering a trade? We can also look at moving averages. So right now, the price action is above the 9, the 30, which is my orange, and the 50. However, we do have the 200 right here. So this is just another form of area where it might come down. Not saying that this is resistance. This is just saying that this is the average of where the candle body's closed. So this is the 200 SMA. So the average of the last 200 candles. Let's see here. What else? You could use your indicators in reference to entry. You know, maybe there is bearish divergence, and the bearish divergence is saying that possibly it might come down. So there's another thought process like, okay, even though these areas are strong, because of the bearish divergence, the price may come down and then might break below this. But hopefully this will play out though. Now, how would I enter this trade? Knowing all the stuff that we just went over. For me, I wouldn't. I would set an alert down here so that hopefully if the price does come down, you know, I would watch it on the 4-hour time frame to see if in fact it does something like this. So if it comes down, I get alerted. I don't enter the trade. I see what's going to happen. You know, I check on it another 8 hours or 12 hours, 16 hours to see if it found support here or if it broke this. If it broke it, well, then I wait to see if it finds support here. If it broke that level, watch out, because more than likely it's going to keep on coming down. But what I'll do is I'll set my alert and then I'll wait 12 hours or so, and then I'll check on it. And then if I see that it is coming up, then now we can enter. We can enter the trade right here. 50%, more than likely 75%, because I'll have my stop loss really tight. So I'll do 75%. And then let's just say it comes down one more time and starts coming up, then I'll do my last 25%. But there's a really good chance that if it does come down here and do this number, that from here, it'll move up fairly quick before it retraces and then starts coming up again. And then here would be the 25% if it doesn't go down. Now, let's say it continues going up from here. So let's say it comes down, it taps this, whatever this was, fair value gap, come up, rejection, come down, then starts coming up again, breaks through this rejection, and then now when it does come down, we have this area of support, this area of support, this area of support. So what was resistance before, and one of the main reasons not entering, now it becomes support. So once it breaks this level, you know, the 4-hour candle has to close above this daily targeted high, which is all the zeros, 22.55. 4-hour candle closes above this. Now we can enter. Because if it comes down, we have a very, very strong possibility that we're going to get support because of all this right here. Even though they're just wicks, this is still strong. Like it couldn't break above. It tried and it couldn't do it. So now when it comes down, hopefully it'll find support and then come up. We already entered one time right here, 4-hour candle close. We enter again. Now we're looking good because now we have the weekly targeted high, which means this is still resistance, but it's not nearly as strong as down here. And now we're looking up. So for this one, what I would do is I would set an alert above these wicks. So I would set an alert about right here, you know, maybe right here. And then of course I would actually set the alert because this is one that I'm looking at. So I would set an alert somewhere around here. And then of course I always do a question mark, but you can put, you know, look at entry or whatever you want to put. So there's my thought process on this one. So again, personally, I would not enter. I would wait. I would wait to see what's going to happen as far as if we get a pullback. I don't think we're going to get a pullback though, because of what Bitcoin's doing right now at this moment. So this is my thought process on this one. Questions, comments, concerns, issues. So the main thing is looking at market structure to see where the price action might go, to see where the levels are strong and see where the levels are targeted, to where those levels just because they're strong levels, that does not mean that it's going to be a bounce or a rejection, retest. It just means that that level is stronger than the other level. It can still be broken. But if, let's say we had let's say we had an order block up here, a fair value gap up here, another fair value gap up here, and we had bullish divergence, and we're, you know, right at an area where, you know, rejection area. Let's say this rejection area. You know, there's a pretty good chance that if it comes down, it's going to come down just a little bit because of the bullish divergence, and because the market makers may be very interested to get these orders filled, and liquidity filled rather, and then for it to come up, and then again, just level by level come down. But the main thing is to always look at the overall picture. If you have the higher time frames saying that it's going to be bullish and the lower time frames saying it's going to be bearish, then the lower time frames play out first. So the lower time frames will come down before possibly going up. But because there's more time involved, so let's go ahead and just kind of write this out. So for the higher time frames, you see this. Well, that's not a good example. For the higher time frames, let's do this. You see this. This is what you see on the higher time frame. So for this is a cup and handle. Very nice cup and handle. Almost textbook. If it would have come down here, it would have been textbook. So cup and handle. Now, this is on the daily time frame. On the 4-hour time frame, this part right here, what we're looking at, we see this. This is on the 4-hour time frame. So and it broke this level. So this is saying that more than likely price is going to go down until it finds support before it goes up. Now on the 1-hour time frame, we have a let's say we have an inverse head and shoulders that's breaking out. So on the 1-hour time frame, it's saying that the price should go up, but due to this, more than likely come back down, get a retest possibly off of this level before, because of the daily. And then so all these lower time frame candles are making up these higher time frame candles. You know, it made its measured move, it's starting to come up. If it did, it measures move or not. And then all that is making up the daily candles. So the lower time frames, they make up what the higher time frames are doing. Now, granted, just because this is a cup and handle on the higher time frame, that does not mean that this on the larger time frame is going to go up. Because let's say this is, you know, this is bullish, it came up, it came down. This is bearish, so it did this number, and then the market changed, and now it's doing this number. It's creating this, you know, to where it's like, well, what the heck is that? Well, it's just doing a range, and because it's doing the range, it's just keep on coming up and down, and starts going sideways, and then there's a huge dump because of Bitcoin, and now because of this on the daily time frame. As more time goes on, now you see candles printing like this, to where this, it did not make the breakout of this, and this they would consider a failed pattern, or re-entering this to where now it's prolonging the handle of the cup and handle before eventually it breaks out. Let's see here. Going checking the questions. Okay, so it says this is a classic example of A-B scenario based on small consolidation that PA is in. Yep, everything's A-B. everything. And it just depends because nobody knows what's going to happen. Nobody knows what's going to happen. So because of that, there has to be an A/B. Now, the one thing that we can say for sure is that we're underneath major resistance. That's the one thing that we know for sure. Does it mean that it can't break out? No, it can break out. It just needs a lot of work to break out. Now, if Bitcoin does its thing, and maybe there's advertising or promotion on this coin, maybe there's Twitter people coordinated with Telegram people, coordinated with YouTubers, like they can push this coin through this easy. And they don't even need all those people because of the market cap. This is a low market cap. So that's the thought process when entering a trade. Not only are you looking at market structure, but you're looking at all the other things that come into play. You know, we're looking at past movement. We're looking at the market cap. You know, is it a big market cap or a small market cap? You know, that depends on how fast it'll move. And then sometimes, you know, for example, this right here, it's a huge market cap, 12.4 million. I'm sorry, billion. And look, it moved already 8%. I was actually looking at it right here. And woulda, shoulda, coulda, woulda. I should have posted it, but I didn't because Bitcoin was very iffy. And it's already, you know, coming up here now. So now I have to wait again to see. More than likely, I'll probably post it. And with this one being a 12, you know, 0.4 billion, we'll have a super tight stop loss. And then we'll have our entry. So here, no market structure was done. No market structure was done. But we do have this. And then in a sense, we do have market structure because what we're doing is we're having to break these highs. So let's look at it from a market structure point of view. And of course, if you have any questions, please put that in the chat. But let's look at this from a market structure point of view. So with this one, we are looking, let's go ahead and bring this up. This is a downtrend. So all we need is this one. And for the downtrend, what we're doing is we have to start from the highest point. We're looking for green candles, and we're looking for green candles and looking for lower highs. That's what we're doing. So come over here. So we're looking for lower highs. So we come all the way down because here's the highest point. So even if we try to go here, it doesn't matter because this high beats these highs. So hopefully that makes sense. So coming all the way down, we're looking for two green candles, and there's green candles right here. So we come down here. Then we come up. This is our high, which would be lower than this high. Then we come all the way down, and then here's our high. And then we come all the way down, and this one doesn't do anything. So this one doesn't do anything, but this one does. Let's see, let me just make sure. So yeah, this one doesn't do anything. Oh man, sometimes I love the magnet tool, and then sometimes, oof. All right, so this right here, we come across. So because this is a break of structure, this is saying that the bottom is weak and the top is strong. So we come over here. Oh, so this leg did something. Almost got tricked. This leg did something. So this one right here, this is our 4 hour low. And then of course, since it was the break of structure, right? Yeah, so break of structure. So this is our targeted. And then our top, which should be this one, because this is the leg that did something. This is our 4 hour high. And then this is our strong. Okay. So now, because this is our strong, does that mean that we are going to get rejected at that area? No. This just means that this is an area that we need to break above. Now, for me personally, would it be better to go above this? Yeah, it would. But then we're just going to keep on going up and up and up. For me personally, I do like this. See, targeted low. Let's get rid of this. Do have a pretty nice fair value gap right here. So on a 4-hour fair value gap center. So now I'm looking at this. Honestly, now that I'm looking at it, because I had just eyeballed it, and for whatever reason, I thought this one was lower. But this comes up to here. Yeah. Yeah, now that I'm looking at it, I completely agree. We would have to set our alert above the 4-hour strong. Because if we were to enter, looking at it now, we have a pretty good possibility. I mean, but man, it's done so much work already that it could come down here. But I think this is the lowest it'll go and then come up. I think that's the lowest it'll go. Right now I'm looking at all the price action. For this one, no, I would have to include it. To question was, can we just not use this scam wick? I would have to include it. Now, if it was like really down here, way, then of course I personally wouldn't. But now what we have to think of is, so this is only 5%. So we could still enter this trade and do a 10% stop loss. We could enter the trade because just because it's strong, that doesn't mean it won't get broken. It's just a little more difficult to break above it. But with the market being the way it is, there's a really good chance that it could do a number going up. I just wish the market cap wasn't so large. Sometimes for me personally, that's one of my biases that I have. Is like, oh, it's a huge market cap, it's not going to move, and then it moves like better than a smaller market cap. But I mean, right now it's moving too. So I think we are going to enter it. We'll play it safe. Man, just the market's moving though. Because Bitcoin does not let up. We're doing good on that one. Ton. So I'm going to say I'm going to go with 50%. I mean, it is higher risk, but we're also taking into the account of just the market in general. Let's see, 50-50 entry, second after alert. That is exactamundo. That is bingo bango. So 50%. Let's clone this. 50%. Stop loss down here. Stop loss. Copy. This is stop loss. Okay, now let's look for the targets. So we need at least a 10. Oh. Well, that's not. We need at least a 20, rather. Now, I just don't like them when they move this much. I mean, granted, it's a little bit. So, earlier today, we were referring to the pullback. And this is exactly what I'm referring to, the pullback. So here we have a nice move up. And because this nice move up, here's our pullback that I'm expecting. Now, could we wait for the pullback? That'd be safer. But again, it could continue going up and up and up, then retrace. Well, we saw it with, what was it, LDO? Was it LDO? No, it was another one. My things, they all changed to one name, ticker. Wow, couldn't think of that. Jeez. All right, so let's go back over here. What am I doing? Oh yeah, LDO. Nope, I lost it already. Ton. So could you wait for this pullback and then enter here? Yep, sure could. But again, it's only like 4%. Now, if you're doing higher leverage, then it's better to wait for the pullback. But once again, it can continue coming up. And since we're only entering 50%, you know, this isn't too bad. I mean, if you just did a 1x, 2x. Trying to think anything else. Okay. I don't like the risk reward. Oh, we have, oh, I don't like the risk reward. So this would have to be at least 20. So this would be nice right here. But then we also have to look at the amount of time that it might take to get 20% with a market cap of 12.4 billion. And then during that time, so this goes to the whole thought process of actually entering a trade. Now, you know, in order for this trade to be, you know, decent, we need at least a 2-to-1 risk to reward ratio. And knowing that it could come down to the 4-hour fair value gap, I wouldn't enter right now. Because getting a 20% on a 12 billion market cap, it would take minimum 3 to 5 days if the market continues doing what it's doing. I mean, because we already went up 8% in I think it's like 2 days. So this is another thing you have to take into consideration. And how long is Bitcoin going to be running up? Another 2 days, another 4 days, you know, or is it going to go up until tomorrow and then come down? So it would be completely different if we weren't at all-time highs. So with all this comes into the thought process of actually entering a trade. For this one, as much as I'm going to hate it and I'm going to have to bite my tongue on this one, I can't post it because this would require, you know, maybe 5 days, 3 to 5 days easy because of the market cap. If the market cap was 600 million, 900 million, yeah, okay, we can do it. You know, hopefully we can get it within a day or two. You know, hopefully Bitcoin keeps on doing its thing. But on this one, as much as I hate it, and watch, it's going to go. It's going to boom. Always happens. Here. Now this one, like this, I like these, you know, lower market cap coins. You know, they move a lot faster. we can see here, moved a lot faster. Now for this one, like to do the actual entry on this one, I would have to wait for it to break this level. So now it tried to come down and it's like, nope, everybody's still bullish on this one. And it ended up coming up. So to go long, like we could try this. Now this is higher risk just because, you know, we're right here, right at resistance. But I mean, that's a good 10% or so. And then that would possibly be, yeah, 10%. And if it gets rejected here, comes up, well, now people will see it as an inverse head and shoulders. So we'll see. So keeping an eye on that. This one, we entered the trade just because it had retraced 35%. We tried doing a short because, you know, Bitcoin started looking like it was going to come down. And then Bitcoin flipped. And because Bitcoin flipped, this one flipped as well. So as soon as it came here, we posted, okay, because this was our original plan. You know, this was the, you know, here, this is like ideal buy zone. Do I think it'll come down here? No, I sure don't. But we want to see it come down to at least 35% of our entry. And that's what they're doing lately. 50% is great. 75 even better. But at least 35%. And then once it fell to do a short, you know, because I was hoping to come down to the 50 or even the 75, if not more, just depending if Bitcoin kept on doing its thing. And then, of course, you know, we entered the trade. As soon as we entered it, man, it came up and it started coming down. This part right here is like, uh-oh, we're going to get stopped out. And then, nope, market changed again. It's now coming up. So we want to add to our entry on the 4-hour candle close above this level, which is in about 31 minutes. So if we get a candle close above this, then great, we add. If we get the wick, then we don't add, we just wait. This one right here. So all this is just thought process when it comes to the entries. You know, for me, the majority part comes to see how this is the same as this one. TradingView, it had like 8 of them, the same of them. Look, it's the same thing here too. Man, so I lost all my charts. Anyway, so big time, we're doing good on big time, but on this one, I would need it to break this level. I mean, it's not a true pivot, but I would still need to break this level right here. So I'm still watching it. This one right here, this one, I didn't tell the group to add. I mean, I said it in a video, but this is the area that I was saying that once the price action breaks above this area for us to add to the entry, and it did it right here. You know, had plenty of opportunity. But this one is doing well still, and it'll continue doing well. Let's see here. Any questions, comments, concerns, issues? But I mean, there's just so many things that come into play when it comes to the thought process of entry. And sometimes your setup can be great. Your divergence, your break of pattern, your market structure, your moving averages, your Bollinger Bands, your, you know, just everything. Any indicator that you use could be absolutely perfect. And then market changes. So let's see what this says. So this says right now to short. For me, you know, I probably wouldn't, just because, you know, it's already came back into this. It is appearing to be, it's on the 1-hour time frame, starting to get overbought. Well, not overbought yet, but going to it. So it might come down and then possibly come up. I really do love this indicator right here. And it's free too. It is the RSI primed, chart prime, one word, Heiken, or however you say that, Ashi or Ash, whatever, how you say that, these candles. I really do, I like this indicator. Now granted, don't use this for buy and sell, but it just kind of gives you the momentum of the price action. But you can see the price action too, but this, I do like this. All right, very good. So if there's no questions, comments, concerns, issues, we'll be wrapping this up in about 3 minutes. But, you know, these indicators I do like when it comes to this right here. For this, you know, it's screaming 5, 15, 1 hour, 4, 12, daily, bullish. It's screaming it. Now, could it be bearish in the meantime before it turns out to bullish? Yeah, sure. But right now, it looks bullish. And especially with it breaking above this level, bullish, and it's above this, I forget what you call it, dynamic reactor, and then this one too. So right now this is bullish. So I like it. But yeah, it's just really difficult when it comes to actually, you know, doing the trades, and especially right now with the all-time high. That's the biggest thing, is the all-time high, because any moment now, any moment is gonna down. Any moment. Doesn't look like it. Doesn't look like it at all, because it's surprising a whole bunch of people. All right, guys. Well, that's all I got. I do thank you so much. It's been great. It's been fun. Hopefully everybody's learning. If you have any questions, please, you know, put it in the DMs. Please put it in the VIP chat. All right, that's it for me. We'll see you later on. Take care.